Hello guys, hope you're good. Hope you're good. It's been a while. So here in front of us we see Nasdaq 1 minute time frame with a short there. So I'm gonna be revealing how did I actually get that short, and then you'll get the narrative behind the short. To the downside is 1 minute, and then 5 minutes it will actually look like this. You see it's on the week's day, right? So let's go to trading view so that you could see and understand the narrative behind this setup, right? So here we have Nasdaq, right? So it's 3 minutes every. So the narrative is actually what happens after the market did after we run here, even after we run the short-term high, right? So you should think in terms of what liquidity, understand? So what will happen when these markets we run the high, and then the majority of people, if we show a diagram, it actually look like this. Once the market we run a short-term high, not what they will do, they will quickly come here, right? They will quickly come here. They can even come here, right? So here they're gonna be looking at the bullish candlesticks. So the idea is gonna be maybe you wanna hit this level and you go higher, or we wanna from here we can drop to this level and go higher, because what are they actually looking at? They are actually looking at their short-term high. So now they think now market is bullish, right? Bullish to new highs. So we want to use that narrative instead. So we can see here, right? But they didn't actually zoom out. If you zoom out, you will actually see you will have a clear support level. So below each and every support level, they're gonna be liquidity below that level there. Understand? So we will use what? We use a magnet, a magnet to show that the market is more likely gonna be pulled towards the side than to the upside. Understand? So they just focus on this price. Or even they can also be looking at the very same thing. Or they're gonna be looking at that where maybe above the short-term high. See, they say, okay, we run that short-term high. So we wanna be looking for, we wanna be buying these markets here. So once you do that, you see that you're part of what? Of liquidity generated. So the market is more likely gonna move to the easiest strong liquidity. Last time, so the easiest strong liquidity is gonna be lots relative equal lows at that level, compared to you thinking this market maybe you break structure to the other side. Understand? So we're gonna have this levels. So these levels, you wanna frame the trade using those levels, right? So if you understand here, you see the very same thing which is happening there, right? And then if you wanna buy here, you see equal lows. So the market is more likely gonna liquidate at level. So we are actually looking for the market to do what? To potentially run below these two lows, right? Then also we see the majority of people, I think here maybe it's their confirmation after they used this level to go higher, and then the stops, they're gonna be below these levels. That's why we say we're gonna use this market to show that the market is more likely gonna be pulled low, right? So now if we zoom in, you will see that you will see what? You see it's either this level or this level. So if you're looking for those levels, we're gonna use maybe this one. We can use this one. We can also use this one. See at that level. So it's on a 3-minute. So meaning what they'll do, they'll look for price here or here. So we're gonna look for price at these levels. You understand? They're gonna look for price, but first of all, make sure you understand the narrative why the market has to come down. Like you have to have that question every time you analyze this market. Why must it go down, and what are the majority of people thinking? Right? So here already we see they're gonna think we're gonna spool higher. Like they'll buy here thinking new prices to the upside, and then also thinking this short-term high or even this one. The very same thing as that diagram there. Right? So they'll buy here, the stops can be here. It looks like it's buying. Boom, liquidity. If it near on what time frame looks like it's buying, but we liquidate. To which level? There is a level with the magnet, right? So now what we do, we're gonna mark this one because it's important, right? You're gonna mark that one is important, and then we drop down to 1 minute time frame. Then here you see it's gonna look like this, and then we're gonna take this level because we already see that the market has to go lower. Why? Because you're gonna have those levels there with the market, right? And then we're here, so what we do, we're gonna form a consolidation at that level, right? It's gonna be something like this, consolidation at that level. So once you see a consolidation, what you do, we take the fib, right? So let me draw it here on the side so that you see something like this. Let's say we see a continuation, not a continuation, it's just a consolidation, right? And then what we do, we want market. After the market, we take the Fibonacci, we drop it from here or even at high, but you're only allowed to go 2 times higher if you're looking for short-term highs. So in this case, you can use this one or that one. So if you use this one on the Fibonacci, what do you want? We want the midpoint of the consolidation. And how do you find the midpoint of the consolidation? We take the very same fib from here to the high. Right, so you're looking for 50%. So 50% is somewhere at that level. Right, it's somewhere at that level, close to the one that I did. Right, one that was a rough sketch. Okay, so we see it's at that level, and then from that 50%, what you want, you can draw an arrow if you want to. Right, an arrow you show that it has to deliver to that 100% of the Fibonacci because it's at the 50. Stops that can be above here. So it has to deliver 100%. And then most of the time, when you see this, it's gonna be on this level there. It's gonna be on that click. Right, when you see the consolidation, so it comes consolidation, and then this short that I took was actually at that level at the high of the thingy. Obviously, there's more, right? There's more to this, right? But this is another way of viewing it. Understand? So I have consolidation. Can be looking to the vertical short at the closure of that candlestick there. You can go short at that level. Then what are you gonna be looking for? 100%. But now what we do, we take the fib, this one to the high, then the midpoint is gonna be somewhere there. So the midpoint of this, and then the arrow has to be from here, and then it will show us obviously it has to come to this level. And then if you check on the left, you'll see this level. It's actually below the market. So it makes sense why the market needs to go lower to the downside. You understand? And then from there, a lot of things that you can do, right? But I'm just showing you another way. And enter candlestick closure, or after this candlestick closes, that's one. You can enter there, to protect the stop, you can be here, candle, and then an easy one is to do, you can come out there at that level. You can be inside, then look deeper because there's a lot of liquidity, right? A lot of liquidity here. We also have a liquidity void at this level, right? That's a liquidity void, so we know they must fill that void. So we can target the low, the void, or even these levels if you want to. Right? But standard, it has to deliver 50% to that level. So you see, it's a very simple trade to understand. But the most important thing is going to be the idea and where is the largest liquidity pool. Right, here we see the largest one is going to be on these levels there. Can even go crazy and use these ones. You can even go crazy and use this one internal. But you see, you're going to have a trend line there. And you're going to have a trend line, then onto the trend line. The buyers, the stops, they're going to be below the trend lines. So obviously here, then going to be a stop. Looks like it's going higher. Then when you take your in profit, you liquidate to the downside. Here you think it's going to buy. Right? Actually, it's even crazy when I see people who are buying at these levels, they place their stops even here. Right? It has to be exactly there so that if it's violated, you can at least lose a little bit compared to if you place it there because it's still gonna go to that side. Most definitely. You understand? So I repeat, that's what you're looking for. Consolidation at the main point of the consolidation. Then I told you what the main point should be from here to here. And then we're gonna mark 50%, which is gonna be at that level. Right? Then once we have that, we take the 50% of this level. That's high, even if that high, we drop it to the 50% of the consultation, and then we're gonna be ready to know the market is to actually run to 100% from that level, right? But it's important to understand what forms this. It's actually these levels there is the one that forms that. And then after candlestick closure, you can go short, right? But usually what I do, everything I do, it's time based. Understand? I don't just enter based on the fractals there. Understand? So as we can see here, entry is actually at that level. The stop was there. Then I was looking for what that short-term low equal low there. Just that I'm holding because I saw that's what you heard me. I mentioned that there's a liquidity void at that level there. See liquidity void here. So you can even target the low or even here if you want to. So that's why I was actually holding these markets. Actually, I am still holding these markets, but I'm still holding. So I hope you find that one insightful. If you have more questions, then you can leave them under the comment section. I'll see you on the next one.